This is Kenya News Update today. A 7% stock crash, a $250 billion bet, and one AI company that could make or break the world's most valuable tech giant. Coming up, you'll discover why Microsoft's historic earnings beat wasn't enough, and the single shocking number that has Wall Street terrified. Meet Satya Nadella, the CEO who transformed Microsoft into a cloud and AI titan. On January 20, 2026, he stood on stage in Davos, Switzerland, projecting confidence. But just days later, his company's stock is in freefall. For 9 years, Nadella's leadership was a masterclass in growth. But here's the twist. The very AI revolution he bet everything on is now cutting into the company's profits. And then something shocking happened. Microsoft reported earnings. They beat expectations. Earnings per share, $4.14, beating the expected $3.97. Revenue, $81.27 billion, beating the expected $80.27 billion. The numbers looked golden, but the market saw something else. The stock plunged 7% in after-hours trading. Why? Because of two words slowing growth. Azure cloud revenue grew 39%. That's down from 40% last quarter. And the company's gross margin. It's the narrowest it's been in 3 years, at just over 68%. But here's the part that will blow your mind. The real story isn't in the past quarter's numbers. It's in a future promise worth $625 billion. That's Microsoft's commercial remaining performance obligation, a measure of unearned future revenue. It's up a staggering 110%. And here's the twist that has analysts panicking. 45% of that massive backlog, nearly half, is tied to one single company, OpenAI. That's the AI lab behind ChatGPT. Jefferies analyst Brent Thill put it bluntly on CNBC. He asked, can OpenAI achieve these financial goals to pay Microsoft? It's a $250 billion cloud commitment from OpenAI that supercharged this number. Microsoft's CFO, Amy Hood, tried to reassure everyone. She said the rest of the backlog is larger and more diversified than most peers. But the damage was done. The market heard concentration risk. The implied operating margin guidance for next quarter is 45.1%, below the expected 45.5%. The reason? Massive investments in AI computing capacity and talent. Microsoft is spending billions to build the infrastructure for the AI future, and it's squeezing their profits today. So what does this mean for every investor watching from Nairobi to New York? Some see a temporary dip, a necessary investment for a dominant AI future. Others see a dangerous over-reliance on a single, unproven partner in OpenAI. The tension is clear. Microsoft won the quarter but lost the narrative. The question now is, did Satya Nadella's biggest gamble, his multi-billion-dollar partnership with OpenAI, just become his biggest liability? If 45% of your future depends on one company, what happens if that company stumbles? Do you think Microsoft's AI bet is genius or a ticking time bomb? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking global business news.